Naren of ICICI Pru, and he mentioned on Anuja's show that for the first time in decades, he's recommending gold and silver in your portfolio now. Yeah. So, I mean, that's kind of the asset allocation that we're looking at. Not just stick to equities, but perhaps look outside as well. Let's do one thing. Let's get back to tracking stocks. Ekta's with us. She's tracking RBL Bank and IDFC First Bank this morning. Ekta, over to you.
Thanks. I'll start with RBL Bank. You know, the NII was up around 16%. The profit was also higher on account of a low base and was supported by the fact that provisions declined quite considerably to around 240 crores versus 650 crores. Net interest margins came in at around 4.5 versus 4.36% on a Q-on-Q basis. So there was some improvement there. But RBL Bank is really reacting to its operating earnings, which have been impacted this quarter. So operating profit is down this time round by 25.8% on a year-on-year basis. It is the fifth quarter of a year-on-year decline when it comes to the operating profit. The bank, in fact, has guided for moderate growth in operating profit in the near term. Slippages also increased, 812 crores versus 653 crores. Annualized slippage ratio is now above 5% for the company, for the bank, and the advances were around 12.5% on a year-on-year basis, which is lower in terms of the average that we've seen other banks report as well. The bank expects credit growth to remain around 15% for FY23. IDFC First Bank, NII up 32%, profit up again on account of a low base to 266%, which was really aided by another income, which was up 36%. Provisions, which were lower by around 11% on a year-on-year basis. Again, for this one, the operating profit probably disappointed a little bit because it was up close to 69% on a year-on-year basis, and slippages continued to remain elevated at around 1,100 crores plus. Annualized slippage ratio 3.5% for the bank this quarter.
Thank you very much for that, Ekta. Take your point on both the banks. RBL, my worry would only be that deposits over the quarter have not grown at all. It's flat. I mean, it's a 0.2% growth. That's the tough task Subramanya Kumar faces. You know, the tough task that Prashant Kumar faced when he came to Yes Bank. And now Yes Bank's deposits, I think, grew by what, 4% quarter on quarter, 13% year on year. It's not easy when a bank has done badly to attract depositors back. Prashant Kumar has been able to do that after a Herculean 2-3 years in Yes Bank. Now, I guess it would be Mr. Subramanya Kumar to do that in RBL Bank to attract the depositors back. That's the tough task. Giving loans is a bit easier compared to that. Okay, let's get to the other good performer in terms of Q2 numbers, MCX. Surabhi is here with an analysis of the Q2 numbers. Surabhi.
MCX reported a very strong set of numbers. It was a top-down beat. The revenue was up 53%. The EBIT nearly doubled at 60 crores versus 27 crores same time last year. The margins came in at 47% versus 33%. The PAT was up 94%. The average daily traded value for futures, that was down 7% on a year-on-year basis. But in the option segment, it was up 5 times at 31,000 crores. The options daily traded value growth has majorly come from the energy basket. The con call is at 4 p.m. today, so we'll get more details then.
Okay, thanks a lot for that. So that's an MCX. But clearly the stock of the moment is ICICI Bank. Fresh record highs there. Ekta is here to tell us about the blockbuster numbers. Ekta.
Well, yes, it's a record-breaking quarter for ICICI Bank on a lot of statistics and a lot of parameters. So NII up around 26.5%, profit up 37%, global net interest margins at 4.31%, which was an all-time high. Gross NPAs also were at the lowest in 31 quarters, so it came in at around 3.19% versus 3.41% as a percentage of loans on a Q-on-Q basis. Slippages low at 4,366 crores versus 5,825 crores. Loan growth at a 27-quarter high, so it was up 22.7%. Now, in terms of the brokerages, the likes of Citi, HSBC, they've all raised their target prices. They have a buy call on the stock in any case. Nomura has a buy with a target of 1,060. Morgan Stanley overweight with a target price of 1,250. Now, the key brokerage takeaways are that the pole position of ICICI Bank remains intact. The key highlights were strong loan growth as well as the net interest margin expansion. The core pre-provision operating profit beat estimates, and a ROE should sustain, which is the return on equity should sustain over a medium term, and they expect the earnings consistency to continue as well going forward.